Hey, thanks for tuning into Story Loans. We're back with our fourth installment of our SMB Expert Series, and today we have with us David C. Barnett, a private transaction advisor. He has a very popular YouTube channel. You can go check it out. You can go to davidcbarnett.com. And we get into all things M&A from both the buyer side and the seller side. It was a really interesting conversation. We get into a wide range of topics like, what it's like going from searcher to operator, making offers, how sellers decide what offers to select. And spoiler alert, it's not always the highest price. And then also just kind of getting into the nuance of buying and selling small businesses and the overall state of the market right now. Because if you've been doing small business buying and selling, you understand it's a kind of a crazy market. We like to call it the wild, wild west. So stick around. I think you're going to enjoy this one. Without further ado, here's my interview with David C. Barnett. Welcome to the podcast, David C. Barnett.
Yeah, the C is important. The C is important. I have a Google News alert on my name on David Barnett, and almost every day there's some piece of news somewhere in the world, whether it's a David Barnett pizza delivery guy getting hit by a car, or once there was a corrupt councilman in a New Jersey township that got arrested and with my name. Uh, so yeah, there's a lot of David Barnetts out there. In particular, the one on the Netflix series.
Oh, we're going to have to link to the Netflix show, I guess. Or maybe we shouldn't. I don't know.
Wasn't me.
But you've been doing content for what's it been? 10 years?
Yeah. Well, depends on how you define content because when I was in college I was on the radio. And so it's funny how you pick up skills and experience along the way that somehow ends up helping you later in life.
You're really good at it, and I know, your trade is, helping people buy and sell businesses, advising business owners. But the content part is interesting to me as also a fellow content creator because there's a lot of it where you can bring in people to help you do it and stuff. Make sure you get your framing right. The sound sounds good. What they can't do is, be on the camera and make you move your mouth and say words and, use pauses and speak. You're really, really smooth and good at the actual communicating of the content. So I really encourage everyone to check out your YouTube channel, which has, a lot more subscribers than we do, and you've been doing a lot longer than we do. So kudos to you.
I referenced being on the radio before, but you want to know where the pauses and the enunciation and the pronunciation, all that stuff comes from? It comes from a grade 12 theater arts class.
Oh, well, that's interesting.
Yeah, because I was trying to get into a co-op program where I would spend my afternoons in grade 12 in a business, like in an office. And the company that had committed to hosting me, um, they had some kind of reorg or something going on. And the person who was kind of like my sponsor there ended up losing their job. And then all of a sudden the co-op placement vanished. And on the day before the semester began, it was like, David, you have to pick two afternoon classes and here is what's available. And I ended up in a theater arts class, which I never thought that I would be interested in, but it was all about presentation and making yourself sound a certain way, or like reading lines, or the way. And so again, it's funny how you pick up experiences and skills along the way that help you as you move forward.
Absolutely. I may have to go down to the local university here and take a theater class now. That's great. It's essentially public speaking, but we're just in this new age of content where it's a different type of public speaking, and you get to edit yourself after, which is nice.
Which is rare, actually. If you've been tuning into some of my content, it's almost entirely one take. There's never any edit. I just don't have time for it. And rarely I will make a video and think to myself, oh my goodness, I forgot a few important things, and I might redo it. But my content isn't edited generally.
And you put out a lot, and I mean, I think yesterday you posted one about, having the confidence to buy a business, which is interesting. And it does seem like you just got a message from somebody and then just turned on your camera and started talking.
So the real creation process is that I got that message and I immediately thought, that's interesting. That could be an interesting conversation. So I just kind of put it into a folder I have on my computer where I accumulate these things. And then I look at these different ideas every once in a while. And so I'm an early morning walker. So I was walking and I was just kind of thinking about it. And I actually stopped a few times on that walk to email myself from my phone, just some thoughts I had about that. And then I sit down and I've got this moleskin, sort of notebook here. And I just kind of sketch out my ideas and then I number them. Sometimes I'll put it into a Word document, because I want to rearrange things. And these are just speaking points. It's not scripted or anything like that. But it just gives me a list of topics and ideas I want to touch on as I talk about it, and then I hit record and I go through it. So it isn't entirely off the cuff, as it were.
Well, it's really interesting, and even that idea was interesting. Is that something a lot of people come to you with, just like struggling with the confidence to buy a business?
I've run into it many times. Usually, people don't come to me with that problem. Usually, people come to me for help to analyze a deal they've found or a business they're interested in. And then the confidence thing only comes up later, 11th hour jitter kind of stuff.
Mm,
But back in my business broker days, and for the people that don't know me, I was a broker from '08 until the end of 2011. And I had many deals fall apart at the 11th hour to the point where I started to kind of catalog what were the reasons and that people gave for the deal backing out of these deals. And that is to say, like the personal reasons, like if the bank said no or whatever, like those sort of outside forces. But the personal reasons, I started to catalog them, and then I started to challenge people more quickly on them because I didn't want to waste months of my time, weeks or months of my time working on a deal with someone only to have them back out. If I had someone who had bought a business before or started one from scratch, it usually wasn't an issue. It was the people that were quitting usually a good job.
hmm
They were the ones that had the issue because they very tangibly had a strong BATNA. And for those that don't know that term, it stands for Best Alternative to a Negotiated Agreement. So if you already have $100,000 job working in a big company or a government agency or something like that, and you're going to quit that to go buy a business, um, which could have a good track record and have good earnings potential, but now all of a sudden it's all on you. You know, that
hmm
can be scary for some people. And many people don't fully flesh out what the reality might be, but late at night, the days before closing, they will explore every different option or every different threat or idea. And that happened a few times where people would back out.
Really, and the deal just didn't go through because of essentially
Yeah.
cold feet, or just they didn't want to leave, a cushy job.
Yeah, and sometimes it's pressure from other people. Sometimes it's not entirely having the support of, your spouse or people in your family. I mean, it's funny. I've been employed and self-employed several times throughout my adult life. It's kind of like back and forth across that fence. But generally speaking, for the last decade, I've been self-employed. And then before that, there were a few 3 to 4 year stints where I had my own business. And I remember I was, in my business brokerage career for several years when my mother asked me when I was going to get a job. Right? I mean, this is my mom. Of all the people that are supposed to be supportive and want to be helpful and encouraging, like your mom is supposed to be one of those people. But, in her paradigm, in her worldview, uh, responsible men went and got like a job at a company or the government or something, with a pension and all that kind of stuff. And she didn't have any entrepreneurs in her family. And that was kind of the way that she perceived things. And she didn't, I don't know, I guess she thought that what I was doing was kind of like playing or pretending. It's kind of funny. I just recorded a video that's going to be released in a couple of weeks about someone who wrote an opinion article in a newspaper about their experience starting a business. And they didn't have a good experience. The business failed, like a lot of startups do. Um, but it was clear from the way the article was written that this person wasn't really a business person. They were kind of like in love with or chasing what I would call the entrepreneur or small business lifestyle. And we've also seen this, I would argue, in the startup community, like that Silicon Valley thing where people are starting these new apps and stuff like that, where there's this startup lifestyle where people are like, yeah, I want to work 16 hours a day in a cool office that has a pool table and a foosball table, and I want to be going to these conferences and I want to stand up and give speeches and TEDx talks about my idea. And it's like, well, okay, so So who's the customer? What are you going to sell them? What are they going to pay? Why would they pay that? Like all the different elements that are important to actually be in business don't seem to be part of the conversation.
Yeah, I mean, if you're starting a business, don't you typically start with the idea for the business, the product or service, address a need in the marketplace? Is that old school thinking now?
Well, you know, to get back to this particular article, I mean, this person actually created a business plan that qualified them for a loan. So they
Wow.
got a loan from a bank with a business plan that obviously demonstrated that there would be sufficient cash flow to repay the loan. But one of the things they said in the article was that their sales never materialized to the point that they thought. I've run into this before because with my presence on YouTube, I mean, people talk to me about buying and selling businesses, but I also get other entrepreneurs who want to reach out. They just want to talk about an issue in their business. They want to get my feedback or run some ideas past me. And I have spoken with a lot of business starting entrepreneurs, startup entrepreneurs. One of the big hazards that I think people face is they get so in love with the idea of their business, what they want to create. They just imagine this future where they're a shopkeeper or a business owner, and they imagine what they're doing every day. And so when they comes down to creating a business plan or creating some kind of sales forecast, instead of actually doing some kind of research or determining what effort might go into securing customers and what a sales conversion cycle might look like realistically, they just start putting in numbers so that it looks good for a lender. So I don't call that a business plan. I call it a loan marketing document or a banker marketing document, right? It's like, what can I put on paper to convince the lender to give me the money? In my opinion, a business plan is supposed to be the place where you test the business, because if you can't make it work on paper, like hallelujah, you just saved all the time and
Right.
money that you potentially would have put at risk actually doing the business.
That's absolutely great advice, David. And it's almost like a feasibility study is kind of another thing someone can do. And by the time you get to the end of the plan, you have to be open to the fact that this is not a viable business, and the emotion can't get in the way of that. And it's the same when you're buying a business, right? I was talking to someone the other day. I saw a lot of problems with the business. There was a way to make it work and a way to structure it, but it wasn't a slam dunk. There was a large spike in, actually not a large spike in revenue, but there was year over year growth where the numbers really only worked for 1 year, and high seasonality, almost like, we're talking like fireworks business type of seasonality. Uh, and it was, the buyer was just like, it was a competitive situation. There was multiple offers. I had to go in full price. I had to give the seller what they wanted. And I passed on the deal. And I was just like, why are you doing this? And I was like, are you open to restructuring? They're like, no. Are you open to doing a QV? No. They won the deal and wanted to keep the deal no matter what. So I feel like that's a potential risk for a buyer to go through, because I feel like they're just going to go through due diligence, and no matter what they find, they're going to talk themselves into doing that deal.
A phrase I like to use, and I don't know if I'm the person who coined it or not, but I call it the day two problem, because so many people that I run into are just so focused on getting a deal done. They feel like they need to get a deal done. And that was kind of the idea behind the confidence to buy a business video. I was asking the guy, why do you think you need to do this? Because buying a business is a pretty rare act. Now, if you think about all people, right? In the country or what have you, hundreds of millions of people. How many of them do a deal to buy a business? It's a very small number, right? And sometimes I think we get influenced where we think that we need to do something or that we should do something, almost like it's a keeping up with the Joneses kind of activity, or a status symbol in certain circles, like I've done this. On day two, after the deal is done, you need to have a successful, profitable, cash flowing business, service all the debts, etc., and give yourself adequate compensation for the risks that you're taking in the deal, and make sure there's enough cash flow for the things that are not accounted for in the typical measures of cash flow that buyers use. So in smaller businesses, we use sellers' discretionary earnings, and bigger ones, we use EBITDA. And those specifically don't include depreciation and amortization, which means that there's no allowance in there for capital investment. And so, if you forget that machines wear out and have to be replaced, or that to grow the business you might need more trucks or something like that, then all of a sudden the cash flow you thought was there really isn't there.
Absolutely.
and I see these mistakes over and over, and you hear about them when you listen to podcasts about business deals. And it's funny because there really is a little bit of a media echo chamber around this idea of buying a business. I was at a conference in October in New Orleans, and it was about social media marketing and stuff online. And so I was there to learn. And I ran into a couple of people that were out actively looking to buy businesses. And we were at this meeting table, and they said a bunch of stuff that I knew was problematic. And I knew that they had some gaps in their understanding and their worldview about what they were doing. But there was another fellow at the table who was a CPA who was probably in his late 50s. And he said like five or six things to these guys about why what they were doing was just completely off. And I sat there realizing, you know what? There's an entire world of actual real experienced business people out there who are not in this community, who are not thinking about this stuff, who are just doing business, right? And they're making decisions and they're running profitable enterprises. And like I don't think that there's enough discussed about some of the common sense stuff. And I think there's also a lot of what do they call it, survivorship bias, because a lot of the stuff that gets talked about is based upon people who believe that they've had a successful transaction sharing their stories, where the people who are afraid or have realized that they've done something wrong or suffer a failure, they're not out there
Right.
shouting it from the rooftops. They don't want to. They don't. Maybe they feel embarrassed or whatever. They don't want to share those stories. Um, but I meet those people, on the phone, or I meet those people by email. I talk with them, and they certainly are out there. You have to make sure that whatever deal you're doing is going to be something that ends up giving you a profitable, successful asset that puts money in your pocket. If you overpay for a business, what you end up doing is you basically end up taking all the future profits that should accrue to the owner of the business, and you're discounting them to the present and handing them to the seller. So you're like giving the seller not just the value of their business, but also a good chunk of what should be yours. And I run a coaching group for people that are buying businesses, and they'll sometimes get outbid by other people for a business that they want to buy. And I'll just say, that's good. It means it's one more dumb or ill-informed buyer that no longer is out there to compete with you. And it sucks, but if you ended up matching their offer, what position would you be in? And they're like, well, it wouldn't be a good position. I'm like, good. So you dodged a bullet.
Is that why the market's so tough right now, David? Because there's just not an, I mean, there's a lot more buyers that are willing to make uninformed decisions than there are, good quality businesses for sale.
The thing about the market for small businesses is it's probably the least transparent or most opaque market that there is for anything outside of illegal markets, maybe, but there just isn't good information. The buyers and sellers have varying degrees of expertise and information. It's hard to find a good deal. And the difficulty means that there are things out there that have to be uncovered by people who are willing to do the work. And so the people who do the work, who try all the different ways to find a good business, can sometimes find the right business. And each one of these people that's doing the work to try to find a business has a different idea of what a good business is. It's not like the market for four-door used cars, where you've got a bunch of buyers, a bunch of sellers, and a bunch of four-door used cars. Like every business is unique to some degree, and every buyer is looking for something, hopefully they can contribute value to, that they think is interesting for them. And the sellers have varying degrees of expertise in what they're doing. So I looked at a sim yesterday for somebody who is trying to sell their business for two times revenue. And it's a small retail business. So why does the person think that's reasonable? Well, it's because they listened to a podcast where someone talked about how these businesses are worth two times cash flow. They didn't understand the conversation. They think their business is worth two times revenue,
But if there's a
right?
sim, wouldn't that have been put together by a broker?
Yeah, exactly my point. Because there are people that are out there in the market that are representing themselves as the guides or the helpers or the intermediaries that are supposed to be helping people, and yet still this kind of stuff ends up in people's hands.
It's a crazy market. It really is. Most business broker advisors, intermediaries that I know work and want to work with sellers. You seem to gravitate more towards buyers. Do you work with both? How's your business set up?
Yeah, I do work with sellers too. But I work with far more buyers than sellers because there are far more people out there looking to buy. So it's just a numbers game. The the sellers who are out there learning about this stuff are ones who are the planners who realize that their business is an asset and they want to understand how this asset's going to fit into their financial plan, like their retirement plan or whatnot. They're trying to figure out, what do I need to do to maximize the value of this? What should I look for as far as timing? When would be the right time to leave, or how do I get prepared? And what I've learned in my life, both in this business and my prior careers, because I've always dealt with small business owners in my different jobs that I've had, is that the number of business owners who have these attitudes is probably 1 in 10. The vast majority of business owners, they are operators. They think of themselves as the manager or operator of the business, and they spend all day just thinking about the business's concerns and stuff that's happening in the business and the customer that complained, all that kind of stuff, right? They don't take that step back and take the more strategic long-term view. A lot of roofing company owners probably consider themselves to be roofers, as an example, right? The whole E-Myth Michael Gerber thing. It's totally valid. I see it. It's real. The vast majority of people don't put that kind of forethought in. What ends up happening is that their succession plan is to live forever and not to ever have to sell the business. And then something real will happen to them. The top reasons why a business goes up for sale. Uh, First, there's the mental category: burnout, boredom, and fatigue, right? So they check out, they're not interested anymore, and they want to do something else. And then there's divorce, poor health, the need to relocate, and finally retirement. Retirement's the only one people plan for. The other 4 out of 5 reasons that businesses go up for sale is stuff in life that happens to people. And so one of these things happens to them, and then all of a sudden they say, well, I guess I better sell the business. And more often than not, maybe they've received some kind of solicitation from a business broker or something like that. And then they'll just engage with that person and they'll say, sell my business. And if the business isn't ready to be sold, then there's one of 3 kinds of business brokers. I get here's how I put it, Ray. There's 3 kinds of business brokers out there. The first category I would call the shopkeeper. So if you think about a retail store, you walk in, they say, hello, how can I help you? And you say, I'd like to buy a purple hat. And they'll go scour the stockroom looking for a purple hat, trying to please you, right?
Hmm.
They'll do whatever they think they have to make you happy. That's the shopkeeper. And so this is the business broker who would take the listing and put, a 2 times revenue price on it because that's what the customer wants, without understanding how to really serve that person. The second kind of business broker that's out there is what I describe as the dentist. So you go in the dentist's office and you say, my tooth hurts. And they look at you and they look in your mouth and they say, well, you need a root canal. You say, I don't want to do a root canal. I want you to do a filling. And that dentist is going to say, I'm not going to do a filling because that's not what you need. It's not going to fix the problem. It's going to be a waste of my time, waste of your time, waste of your money. You need a root canal. We can do it next week. If you say, no, I don't want the root canal, I want a filling, they're going to say, go find someone else. And that's the kind of business broker a business owner should find, because they're going to explain to that business owner, here's what I can sell your business for. Here's why it holds this value. Here's likely who the buyer is going to be and what their scenario is going to be. And this is, the money they'll have, and they're going to call Ray and get an SBA loan. And this is what the payment's going to look like. And if you look at your cash flow, this is what's affordable. And they're going to say, this is the medicine you need. And some of those sellers are going to say, no, I don't agree. I want $1 million for my $600,000 business, and I'm going to go somewhere else. Well, they're going to waste a lot of their time. The third kind of business broker is what I call the clown, who is just an incompetent person that doesn't really know anything. And they will speak sometimes with a great deal of conviction and sound authoritative. And they can convince some people that they know what they're doing. But at the end of the day, they don't. And these are the ones who can really mess things up, and don't manage the communication between the other parties very well, the attorneys, the accountants, etc. There's a lot of people out there calling themselves a business broker, maybe who have a background in real estate sales or something like that, and they kind of bluff their way through and they cross their fingers and hope that the attorney gets the paperwork right. Yeah, have you ever run into that, Ray?
I was gonna say I've run into all 3 of these people, and the
Okay.
odds are not in your favor. It looks like you have a 1 out of 3 right off the bat chance of getting into a good transaction here.
Well, but the thing is that um, it's only that 1 in 10 business owner who is taking the time to think strategically about their position and what they want to do, and they go out and they look for information. They want to read on the topic, and they network with other business owners. And they probably know someone that sold a business, and they're like hearing through their grapevine how different people behave. Who's a good attorney, who's a good accountant, who's a good business broker. Those people will usually manage to find the right help. It's these other people, the other 90% of the business owners who don't really ever pay attention to that stuff. And then they go out and they go looking, and then they just figure, well, if this person calls themselves this and they've got a good looking website and a business card, they must know what they're doing.
David, how is that? We're talking about transitioning usually a significant, if not, someone's entire net worth, essentially retirement plan, and getting that done, such a high stakes transaction for so many people, because we have a lot of small business owners in this country. And yet the market is, like you just said, it's so crazy. I mean, why isn't this a more, I don't want to say regulated, but like consistent maybe?
Because there's no consistency in business. Like the only kind of businesses I could point to that have any degree of consistency between them would be like Subway franchises. They've got the same sort of weekly reports and they operate in the same fashion. But I mean, I can look at financial statements from two different house building contractors and they can be set up entirely differently. Um, you know, Benchmarking or comparing one business to another is difficult. In North America, financial statements are private, so people aren't able to kind of look and see what other people are doing. Versus European countries where every company has to file their financial statements publicly. Like people can go and look up their competitors' financial statements. It's interesting though because there is a lot of publicly available data. Um, in the states, you've got the Risk Management Associates (RMA) data that is published. A lot of people can get access to it through big public libraries or university libraries. You can look up your industry, and if they've got it divided into quartiles, what the performance is based on tax return information. And so this is one of the things I point out to people who want to get into business. I'm like, have you looked up the RMA data on it? And the Canadian data is just on a public website. You can just look it up. The other day when I was making that video about the newspaper article, this guy got into an industry where 75% of the businesses in that industry don't have sales above 1.2 million a year. Like 1.2 million in revenue is a pretty small business, right? It would be hard for a business owner to earn, much more than 100 grand if you had 1.2 million in revenue in a business and you were working in the business full time. Well, that's just like the 75th percentage one that had 1.2 million. The other 74% or below that, in fact, half the businesses in the category had revenue below 480,000, right? So if you looked at that information before getting into that industry, I think it would give you great pause because you'd realize, hey, wait a minute,
Mm-hmm.
half the actors in this industry really aren't making any money. And then the second thing is I would say, instead of starting a business in this industry, why don't you just poke around and see if anyone's interested in getting out? Because not only would you be able to take a look at their performance, but you'd avoid the whole risk of finding customers, right? I mean, that's the big risk of starting a business is you don't have the customers. This is why, people talk about buying a business.
Why don't business brokers put all of their listings on Biz Buy Sell?
Because they are afraid of violating confidentiality.
Really?
I mean, certain businesses are unique enough that somebody involved in the industry could guess who they are with certain key pieces of information.
A lot of these business owners want the sale to be quieter, and so you're basically going to your networks to find a buyer.
Yeah. Like, I asked a broker from Tennessee to come into my coaching group to do an interview once, and her firm has a good number of listings that are not publicly available, even on the firm's own website. And basically, the promise or the service offering that the brokerage offers to those people is, we are only going to show information about your business to people we already know are qualified. So they've met these buyers, the buyers have signed an NDA, they've demonstrated some degree of financial ability, or they've gone out looking for strategic acquirers. So the broker has kind of looked at the industry and tried to figure out who owns a company like this 2 states over that might be interested in growing geographically, or who's above them or below them in the value chain that might be interested in expanding their position on the value chain. So it's about confidentiality.
Sometimes, selling to a competitor can be a good move, but going through that process with a competitor, especially one that's in your market, right? I mean, then you're having to disclose that you're for sale. So how does a small business owner need to think about that?
So I think that trying to sell to a competitor that competes in your market is very dangerous. In fact, that competitor is not going to value you as much as someone in your industry who is not your competitor. So if you want to take, for example, the widget company that competes with another widget company in the same city, when those guys look at your business, back in the deep recesses of their mind, what they're thinking is, geez, if you just went out of business, we'd get to all your customers anyway,
And employees, maybe.
and employees too, right? So there's this entitlement. This is my market. I operate in this market. Why am I going to pay you to get more people from my own market when they should just be my customers anyway if you went away?
They don't see as much value as a random buyer coming in to this industry.
Well, not a random buyer, but someone in the same industry in the next state who doesn't compete with you directly, right? Because they can understand your business. Number one, they already operate a business like yours, and for them, acquiring you opens the door to an entirely new customer set they don't have access to today. But you might share, for example, suppliers. So just by buying you, maybe they double their purchase volume from a certain supplier. Maybe that's going to open the door to a better price. Like they could improve the operations of both companies without actually changing anything, just by having greater purchase volumes, right? And so those are the kind of deals where the greatest synergies can be applied, I think.
And by the way, I didn't mean a random buyer, David. Like,
Okay.
you buy my business.
I was imagining, someone leaving their job at the post office, like to come and buy the business or something like that. Yeah.
It's funny that video you put up yesterday about confidence. I feel like the bigger problem is people are too confident sometimes about buying a business. There's a lot of risk here. I mean, how do you address with these buyers the risk? Because, I mean, do you have to have the conversation that you essentially can go bankrupt doing this? Do people actually think about that and what that would look like?
Um, some of them do, some of them don't. Um, I, I mean, I have a training program called Business Buyer Advantage, and in that program, I introduce people to something called Exter's Pyramid of Liquidity. And John Exter was a central banker at the Federal Reserve in the 1950s, and he created this pyramid. It's an upside down pyramid, so the point is at the bottom. And
Hmm.
what he was trying to do with this pyramid is he was trying to describe the flow of capital in a crisis. So back in those days, the dollar was gold exchangeable. So at the bottom point of this triangle is gold, and then right above it is cash, like bills, like tender notes, right? And then above that is government T-bills, and above that is corporate debt of solid companies, and above that would be equities. And real estate is somewhere in there too. But he basically tried to stack the different assets in the order of riskiness. And he said if there's some kind of crisis like war or whatever, people will try to trade their assets for something lower on this pyramid because they will be trying to avoid risk. Well, do you want to guess where he put privately controlled small business?
At the top.
At the very top, being the riskiest asset of all, because you've got, you know, all different kinds of market risks, competition risks, regulatory risks, but the biggest one of all is liquidity risk. Because if you decide, if I bought 100 shares of the phone company and I decided tomorrow I really didn't like them, as long as the stock market's open, I can just sell it in an instant, right? But if I buy a small privately controlled business and I decide after a few months I don't really like it, I made a mistake, it could take me years to get out of it. And the fact that I'm trying to sell it just after I bought it would cause most buyers to pause and wonder, what I had discovered that was terribly wrong with it, right? And so that liquidity risk is the biggest one. And you mentioned earlier about why don't business owners do a better job of preparing for the sale? And you mentioned, this is a big part of their net worth and all this kind of thing. It shouldn't be. And here's why. In a successful, profitable business, you've got profits every year, and you should be drawing those out in the form of salary, dividends, distributions, however your company's organized, right? And then you take that money and you invest it in other things. Small businesses trade for relatively low multiples, 2, 3 times cash flow for the smaller businesses, right? And so think about that. If I've owned the business for 20 years, well, if the business is only worth 2 or 3 times the cash flow, I should have like a whole whack of other wealth that's already come out of that business.
But I don't see that as much though, because sometimes all of a sudden in the past year or so, the business becomes a lot more profitable, and it was worth half, a year ago, and they've been preparing it for sale, and now there's either growth and more profits, or just better margins, and so the business is worth more on paper because it's a multiple of a larger number of SDE.
Miraculously, the business becomes more valuable because they've suddenly decided to sell it.
Yeah, exactly. Exactly. So how does it, and this was going to be one of my questions, because let's start with the growth. How do we know as a buyer if this business that's just saw 30% growth in the past year, and the numbers only work in the past year, or 18 months or something like that, you know, in order for this deal to make sense, that growth has to be sustainable. How do we look at those deals?
You value it based on what it looked like before. And that the offer is based on what it looked like before. And then you have some kind of extra seller note that is forgivable that is wrapped up in the quote unquote new value. Because if the new value isn't real and isn't sustainable, doesn't stick around, you can't be paying for it, right? This gets back to the day two problem. And I've seen all kinds of files like the ones you described, where there's this huge bump in growth in 1 year. And of course, the seller wants to put all of the evaluation on this most recent result. And if you look at any of the literature about buying a business, it'll talk about enduringly profitable long-term results, et cetera, et cetera, et cetera. You know, I would say to a seller, if you want to be paid on these results, then we need another 2 fiscal years of the same results. Once we've got 3 years at the new level, then we can argue that this business has had a material change and it's now bigger and better.
I would love to do that deal. I just don't see those. That's like 1 out of 10. Or if I'm seeing that, it's in a riskier industry like construction or something like that. That had 3 good years. But I don't know. I see a lot of different things. But I would, I agree with you. I just that takes a disciplined buyer, and still buyers are willing to. There are buyers willing to pay what the seller wants, right? A 3 or 4x multiple on your trailing 12, essentially. And there's banks willing to do it. So those deals are going to get done, and they're high risk, and people should know that.
Well, I'm glad you used the R word because sometimes I'll get into a debate like this with a client, who is really eager to buy the business, and I'll just ask them, why do you want to buy a business instead of starting one? And they'll just say, well, to avoid risk. I'm like, okay, but if you do a deal in an incorrect fashion, if you do it in an incorrect format, if you overpay for a deal, you're just inviting all this other risk back into your life anyway. So so what's the use of buying? Somebody can manipulate 1 year of performance just with some accounting tricks, especially if the business is employing cash-based accounting, right? I mean, you just move some expenses, like pay for some things in December that you're going to sell to someone in January, and you can like move profitability from one period to another. But after 3 years, it becomes much harder for those games to stick, right? And so how do you save someone from themselves from doing something that's potentially dumb as a buyer? Well, you can't. And this is part of what I describe in the market. It is this opaque, non-transparent market where people are doing different things. The scariest deals that I come across, usually years after, are when people don't have the need for a bank loan at all. So I'll describe one to you. So somebody bought a franchise in California, and what they did is they had a house that they had bought in 1992 or something like this that had grown in value tremendously. And they found this business for sale. It was a franchise resale, and they really liked the business and they thought they could run it. And guess what? They had enough home equity for the entire purchase. So they just put a HELOC on their house and then they wrote a check to the seller. And no banker ever looked at it from the point of view of a business deal. And then a few years went by and they decided they wanted to sell it. And I have a relationship with the franchisor. So when they talked to the franchisor, they said, "Oh, David could help you with this." So they reached out to me and sent over their financials. And I said, "Okay, I think your business is worth about $350,000." And they said, "No, no, no, no. We paid 800,000 3 years ago." And I was like, "Well, I know, I see that you did that. It wasn't worth 800,000 then. It was probably worth 300,000 then." And I mean, people do that kind of stuff because they don't know any better. They don't get the right advice. Sometimes people will go and get help from someone like an accountant, but they don't ask the right questions. So I was speaking with one accountant once who a buyer thought that they had hired an accountant to get their opinion on the valuation and everything. But what the accountant understood they were being asked to do was to look at the financial statements and tax returns and give an opinion as to the accuracy of the information in the filings. So when the accountant reviewed them and went back and said, "Yeah, I looked over all these things. It looks good to me," the buyer took that to mean that the accountant thought the value was good. But when I spoke to the accountant, they said, "Well, I don't really value businesses. It's not really my thing." Like, and for most accountants, that's the same case.
Right. Wow. There's a lot of landmines out here. And it's interesting because talk about confidence. A lot of the folks coming in to buy a business come from the financial sector where they've had a lot of success in private equity or investment banking. A few years, maybe they had 5 years, maybe they have an MBA. Um, and doing a transaction like this, often they've worked on bigger transactions.
Hmm.
But I'm always fascinated by the transition from searcher to operator. It's so it's so interesting to me because it's the running a process comes natural to some of these folks, and they know a little bit about what's on the other side, but they've never actually sat in the seat. And it's just like that first year is absolutely crazy. Running a small business, something always goes terribly wrong, and it's really a matter of you know can you get through that and actually come out on the other side. What are your thoughts on this whole phenomenon of folks coming from that sector and buying small businesses that are like blue collar with folks that they haven't worked around in the past? Do you have a take on that?
Yeah, I do. In fact, I had a conversation on my YouTube channel recently with a guy named John Matzner, who's on Twitter and talks about some of this stuff as well. And he said an interesting thing. He said that some of these people that come out of like private equity, like you suggest, when they do the searching, the job or the work that a searcher does every day is kind of like the work that someone might do at a PE fund, looking for deals. And so they're talking with people, they're looking at financials, they're organizing things in their CRM, like the work is kind of the same. But when you get into operating, it's very different. And um, when you're in a big organization, like if you work in a bank or a big company, you're in a world. It's almost like I imagine it like a honeycomb world, like if you think of a beehive with all the little cells, right? Where you've got all of these people doing their job in to a great degree of isolation with a high degree of specialization. And so, the person in HR who does payroll, they know everything there is about payroll, but they have no idea where the money comes from on payday, right? But they don't need to because there's someone else in treasury that's managing, the cash, and then there's someone else in sales managing the sales. And so, even people that have experience in a large company, they may have managed a P&L in a division or something like that, but they never managed the balance sheet. Like every time they needed more operating capital to finance receivables, someone else magically delivered the money, right? And when you become a small business operator, you're suddenly thrust into an environment where there are different people doing different parts of the work, but you don't have the honeycomb of all the different specialists. You've got maybe a small team. Maybe you've got a business with 25 employees and 20 of them are client facing out, serving customers and doing the work. And you got 5 people in the office who all kind of cover a multitude of roles, and no one's really a specialist perfectly in any particular one, but they're multidisciplined people who can kind of come up with solutions and figure things out. And you know, you could ask someone like, "Oh, you do that? Like, why don't you use Zapier?" And they've never heard of Zapier, right? Because that's just not their world. And so I'm a huge proponent of having some degree of experience in a business and understanding what that business is. In fact, I categorize the majority of the buyers I work with, and keep in mind the big majority of what I work on is what I describe as Main Street businesses, so 500,000 of EBITDA and lower. And I do work with people kind of getting into that lower mid market space, and a lot of the people that you kind of described, to my understanding, that might call themselves search funders or self funded searchers or something like that. They're looking for a little bit bigger businesses typically. Who I work with, the people fall into two broad categories. Number one are people that need some kind of income and face a barrier to the labor market. So a lot of these will be newcomers to the country. and maybe they're professionals in their homeland, but their designations and their degrees aren't recognized here. And so they say, geez, I'm either going to be working in a restaurant or I better buy a business. And so those people will look for a business that they know that they can manage, and they're going to look for something where their skills might be applicable. So they might be an engineer in their homeland and they can't be an engineer here, but they're going to get into a business involved somehow in construction because their background is going to allow them to apply their knowledge to maybe run that business better and innovate, get into new products and services that are going to serve the construction trade that they understand because they're involved in building things back home. So that's one category. The second category would be people who kind of reach their mid-career point and they realize I'm never going to realize my full potential in this organization. And I know I can do better. I know I can make better decisions. I know I can grow personally, and I want to do it. And the only way I'm going to do it is in my own thing. And a lot of these people will explore starting a business. And then usually because of obligations, family, mortgage, kids about to go to university, that kind of thing, they'll realize, hey, this is super risky. Maybe it makes more sense to buy something that already functions, that already has a cash flow. And then they'll end up finding some of my stuff online and they'll come and learn from me. I would say since 2021, Ray, that I've really started to meet these people who are showing up saying, I want to buy a business because I heard there's this monumental transfer of wealth going on. And I'll say, well, what's your experience in business? And they won't really have a whole lot of experience in business other than maybe the career that they've had. But they think that there's this gold mine or this untapped potential. And we know that 80% of businesses listed for sale online don't sell.
Wow.
And we talked about the business owners that don't really think of their business as an asset. A lot of them are working every day for a cash flow that's not much better than a salary would be paid in that industry, right? So these are the businesses that are kind of like jobs. And so to your point earlier about the number of businesses that are actually qualify to be acquired, they've got to have a significant size, they've got to have a significant cash flow, they have to be able to meet all the cash flow demands. And I always say that there's two questions that a buyer asks. The first question being, what's the cash flow? And that's going to determine the price. The second question is going to be, will the cash flow continue under my stewardship? And that's when you get into organization, systems, processes, all that other kind of stuff, sort of the softer stuff that a lot of entrepreneurs like to ignore, kind of resides in their head a lot of the time. And so if they agree that this will continue under their stewardship, it means that they believe that they're going to be able to execute those things that are in the business. And so if it's a bigger business that has middle management and some people that are experienced in leadership that are going to be sticking around, it's going to be easier. But I mean, I've seen people like the ones you describe buy a business where they're going to come in and get a few months of training from the seller and they're going to be operating it day to day. You know what the thing is I sometimes challenge people with that they really seem shocked with is I'll say, if you're going to buy a business in this industry, have you ever considered getting a job in this industry, even part time, evenings, weekends? Like, go work in this business, see what it's like, see what is it like. A person that's not a plumber might still be able to get a job at a plumbing company doing some function in the office or something like that.
It's smart. No one does that, but that would mitigate a lot of risk and potentially maybe this wasn't for you after all.
Some people get so caught up in the deal and the numbers and the paperwork and the financials that they don't ask themselves, will I be proud and confident, you know, telling all my friends that this is the kind of business I own? Or is this going to fit within my concept of self image? This is one of the things that I've noticed that has killed deals at the 11th hour is people will get excited about a business's cash flow. There's a story I like to tell about a fried chicken franchise that I sold 3 times. The first 2 deals fell apart at the 11th hour. It was a really good business with really good revenue, really good cash flow. And so it was attracting people because of its numbers. And the reason it performed so well is because the owner was there every day from first light until 4 in the afternoon. And then his son in law came in and ran it from 4 in the afternoon to 10 p.m. Right. So there was a family member on site at all times. So this thing operated like a well oiled machine. And people had this idea that they could just buy it and hire someone to be the manager. And this guy, his name was Tony, he would roll up his sleeves and he would show people where he'd been burned by fryer grease, where the French fry slicer had cut his fingers. He didn't want a workers' comp claim, so he wouldn't let any of the employees clean the French fry slicing machine. Like he personally did it because it was such a dangerous piece of equipment once it was opened up, right? Like and the little grid of blades was exposed. He cleaned it every day, and he was the owner of the business because he didn't want anyone putting their finger in it and risking his good rate because he hadn't had an accident in years, kind of thing. And he would describe the cleaning regimen. He had a 4-day cleaning regimen where day one, the north side of the kitchen, everything was cleaned, pulled away from the wall, cleaned beneath, etc. And then they would do east, south, west, etc. on a 4-day rotation. And he was like the foreman of that. And he said like he did not trust his employees with these things because he had at some time prior, and people would start cutting corners, and he wanted to have this spotless kitchen because that was a source of pride for him. you know and I had people that worked at banks and government offices and stuff like that come to look at the business because of the numbers. And when they sat down with Tony and they started hearing these stories, they quickly realized that if they were going to have that cash flow continue under their stewardship, they were going to have to spend 50 hours a week there.
What I say is, can you see yourself actually in that business? Like picture it.
Yeah.
So I want to ask you one more question, then I got to let you go, David. Just because I feel like once you do find that good deal and you want to put in your offer, and sometimes there's multiple offers, what are those conversations like between the selling broker, the listing broker, and the business owner when there are multiple offers on the table and you're like trying to decide? Take me behind the scenes of what that conversation looks like.
So if the seller has been properly prepared to look at offers, it will mean that many of those offers are going to have a material amount of seller financing. Because I always told my sellers that the only way a buyer was going to be able to pay a truly reasonable price, meaning the highest price possible, there was going to have to be a good degree of seller financing. So, in that scenario, the seller has to not only choose what looks like the most attractive financial offer, but they have to choose the buyer that they feel the most confident in, because ultimately those seller note payments are going to depend upon the success of the buyer. So I have had deals where there were multiple offers, and I have had sellers choose the lowest priced one
Hmm.
because they had the greatest degree of confidence in that particular buyer. And the only way that the buyer is able to create that kind of scenario is by establishing their credibility and the relationship with the seller. And so I always coach my buyers, you've got to meet the seller in person. You have to meet them probably a couple times before you make the offer. You also need to ideally present the offer to the broker and the seller so you can explain the different whys of how you've set it up. And I also say that there's no reason why you can't make more than one offer simultaneously. So you can come up with a couple of different scenarios and present them both.
Interesting. Well, that's great advice, David. I appreciate you so much for stopping by and sharing your insight. Where can folks find you if they need to reach out?
Well, if you go to davidcbarnett.com, that's my blog site, and you can get all kinds of content there or sign up for my email list. And if you're just interested in more of this content, you just look up David Barnett Small Business on YouTube or any of the podcast feeds, and you'll find me right away. I publish once a week at least with my answer a question videos, and then sometimes I have guests on, and those are usually live stream interview chats that happen on Mondays, but not every Monday. Anyway, but I'm out there and I'm easy to find.
Very cool. All right. Well, thank you so much.
Thanks, Ray.